Welcome back for our marketing discussion this week. We have Brian Grady as well as John Sheet. All right, let's start off with EPA's proposed rule announced last Friday that would increase biomass-based diesel requirements from 3.35 billion gallons in 2025 to 5.61 billion gallons in 2026 and limit foreign feedstocks. Brian, is this the demand story that soybeans have been searching for?
Yeah, I think it is, because it came in not only higher, sharply higher, but the pre-report or the pre-release talk was that the number was going to be disappointing for soy oil use and for biodiesel. And so we got a bullish number. And, it's strong, especially for soy oil. There are other components that still aren't known yet, the SREs, that they still need to give a proposal on that, how they'll handle those. Ethanol was about steady, but for soy oil, definitely bullish.
Yeah, John, is the soybean market still trading this news this week? And have you liked the price action in soybeans?
I think you have to like the price action in soybeans, but I think the more important thing is that this is really good for beans long term. This is what beans needed for 2026 and 2027 to build strength. This will definitely increase acres next year, which then will in effect help corn because we'll have less corn acres, and we'll put more into the beans. So I look at this as what the market needed to turn around in the very long term, and I'm talking a year out. Does this do anything in the near term? Probably it won't get as exciting. This is something that is for calendar year 2026. So the 2025 crop, which is most of it's sold in calendar year 2026, will do a lot better.
Well, some hope to hang on to there. Brian, there wasn't much change, though, on the ethanol front when we saw this announcement from EPA. Ethanol production, it has been solid lately. I know it slipped a bit this week. But what about ethanol demand?
Well, just 2 weeks ago, we had a record in ethanol production for the weekly side of things. So I think the important thing here is don't forget about the exports. Ethanol exports are really strong right now, and that's carrying us. As you look out, fuel usage is expected or projected to decline a little bit, but the mandate will keep the corn-based ethanol at that 15 billion gallons, and so a good solid demand base. We shouldn't see any real changes on the supply and demand table for corn because of this.
John, what is it going to take to change the sentiment in the corn market right now? Is it all fund related?
I think that the funds have certainly put a lot of pressure on it, but I think the question comes to how much corn is still left in the bins, and there's a big argument, I think, in the market about that. I think there could potentially be 20% of that crop left. The farmer hasn't really sold anything since February's rallies. They've been waiting for something over $5 cash. Parts of the country can see that with high basis in the east, but the rest of the country isn't seeing that, and they're not getting their goals, and they're holding out that 20% now until after pollination, probably, because they want to see if we're going to have a drought or not, and they'll wait for another drought like we had last year in August and hope there's one to move that last little bit. So no, you're going to have a weather event to cause corn to rally, or it's going to have to be a black swan event that we can't even think about right now that would potentially even cause this market to rally.
Well, let's hit on that, Brian, because with so much rain already hitting key areas of the Corn Belt, we had started to hear about flash drought this week. We just had Drew Lerner on, and he said, no, I'm not worried about flash drought. So could this be the year that we don't see a weather rally in the corn market?
Well, 2024 was the year we didn't see a summer rally in the corn market, and that's rare. Just a handful of times that's occurred, and we just haven't seen back-to-back times where it hasn't rallied during the summertime. So I think a summertime corn rally is in the cards at some point in time. Weather's the most likely thing to trigger it when we look at the National Weather Service extended forecast through September, above normal temperatures with some dryness in the western Corn Belt. So that's already areas that are dry currently. Even with these recent rains moving through, there's still some abnormal dryness out there. And so that's probably the area we need to watch. Nebraska, maybe southern South Dakota, far northern Kansas, that area is probably the most at risk.
All right, acreage or grain stocks? Two major reports coming up in just over a week that could impact the market, but which could have the biggest impact? We're going to ask John that right after the break.